Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, let's take a look again at the euro currency. Well guys, on the first glance the situation on the euro currency is the same as on Friday, but not quite the same. In general, this move up on the daily time frame is a respect of this support area that also could be seen on the weekly time frame chart. This is confluence support, and that is also natural support resistance line. Here's, if you contract the chart, you'll see that here stands some tops, previous tops. This is also natural support resistance. And in fact, we have expected this move up because we said since overall context is bearish on the euro currency market has formed significant bearish engulfing pattern on the weekly time frame, we need some bounce to the upside, because that also was the oversold condition on the daily time frame, and we said we need some rally to sell into, so we need some retracement that we could use for possible taking the short position, and that retracement has happened. Now our major concern is whether this retracement has finished, or we will see still some upward continuation. Well, and this situation is a bit interesting and tricky, because if you will read our weekly research, you will see that this action on the weekly time frame chart looks as bullish engulfing pattern. Bullish engulfing pattern has two major points. The first point is right here, this invalidation point. So if market will move to the downside and vanish the engulfing pattern, so probably downward, we will see downward continuation, or market could reach some target of the engulfing pattern. Usually this is the length of the bars. So if you count it to the upside, you will get an area somewhere around 136.30, 136.50 area. So that stands around next few resistance, the 618 resistance. But the trickiness of this situation stands with the patterns that we could get on the daily time frame chart. First of all, that is our brand body sell. Take a look. Market has shown 3 closes above the 3x3 and has reached the significant fib resistance level. This major fib resistance 135 of whole move to the downside. So both conditions for starting of the brand body trade have been accomplished, and since market has no time left to coil around, to stand around this resistance, it should start move to the downside if brand body trade will work. In fact, market has no choice, either some sort of the pain or gain situation. So either market will complete it and start move to the downside, or it failed and market will proceed higher. That's the first moment. Although the brand body trade in fact doesn't suggest the necessity of the taking out of these lows and downward continuation, because the minimum target of the brand body is the 618 support of that move. So it stands around 130, 340 approximately, 618 support somewhere in this area of that move. But very often brand bodies become the starting point of the downward continuation. And take a look, the second moment that's more significant for us, so price has approached right to the MACD predictor on the daily time frame chart. So on the Monday, market will start to flirt with this pattern, with this indicator. And if we will get the stop grabber here, bearish stop grabber, it will suggest the taking out of these lows, and simultaneously that will be the pattern that will hint on the erasing of the bullish engulfing on the weekly time frame chart. This in fact will be the opposite pattern to the one that we have on weekly time frame. That's why on Monday this will be really a significant trading session, and a lot to monitor will be on Monday. That's briefly what we have to see over on daily time frame chart. Now let's take a look on the intraday chart. On the 4-hour time frame, we also have very significant issue. This is the long range candle to the downside. Long ranged candles is a very useful tool because it could provide significant assistance when we will monitor for potential breakout, because usually the long ranged candles holds the next price action for the significant period. And take a look, that was happened on the 7th of November, and today will be already the 18th, so it's 10 days market stands inside the range of this candle. That's why the borders of these candles will be really significant. Some rules of the trading of the long range candles suggests that if market shows the failure breakout, so if we will see some breakout to the upside, market will fail and turn to the downside. That in fact what we would like to see from the bearish perspective, from perspective of our analysis. Sometimes it suggests not only the reaching of the opposite border, but very often market doubles the range of this long candle to the downside. That's why the long range candles are very significant, because their bodies become some sort of the indicator, some sort of the beacon that tells us what to expect if market, for instance, will fail to pass through it. It will show some failure breakout, attempt of the breakout, and turn to the downside again. This market will maybe some kind of the Russian rinse or something of that sort will happen. Well, that's why this pattern is also significant. On the hourly time frame chart, we see that market is forming the rising wedge by the shape. This is some sort of the housing pattern. The price action inside of the wedge is rather choppy. That's typical for the retracement, and in general the overall price action looks a bit heavy right now. And take a look, that pattern that we have discussed on Friday, this is our potential reversal for the butterfly, and in general this pattern agrees with the patterns that we have on the high time frame charts. So if we compound the potential stop grabber, the starting point of the brand body sell, appearing of the reversal pattern on the intraday chart, they combine in very harmonic picture that really add each other, and that gives us a confidence that probably market really has not bad chances to turn to the downside. And take a look that the 127 extension pair target of this butterfly coincides with the high border of this candle, of this long range bar on the 4-hour time frame chart. The 1618 target stands very close to the weekly pivot resistance one. So that's two levels that we will monitor on Monday, with the hope to see some kind of the reversal to the downside, since butterfly is a reversal pattern. The one thing that is a bit worries me that sometimes I have seen that market at the first glance looks heavy, and in general on the 4-hour time frame chart you could see, maybe on the daily time frame you see that this is a bit not really some sort of the light and free action as market very often shows when it's accelerating to the upside. It looks a bit heavy here, but sometimes I see how market breaks through this heaviness by at the first glance forming reversal pattern or scalping pattern as the wedge, but then suddenly has shown the fast acceleration to the upside. Sometimes this could happen, and in fact happens sometimes. Well, I think that this is our major risk. But if market will show this action, that will erase all bearish patterns that we have. Butterfly will fail, brand body will fail, and stop grabber will not be formed, because market in this case just turned trend to the bullish side. In this case we probably will have to wait for deeper retracement to the upside, because the next target that market could reach by the engulfing pattern that has been formed on the weekly time frame stands around 3650. Well, that's our major risk. But meantime, until this will happen, and maybe this will not happen at all, until this moment we will keep an eye on this butterfly, because this combination of the patterns that we have now on the daily time frame, on the hourly time frame, we just can't ignore it, because it carries a lot of significant opportunity for trading on the bear side of the market, and this could lead market to the 130-150 area. That is not small move. That's about the 250 pips to the downside. Well, that's why we should treat it seriously and do not just skip it and do not ignore it. Well, that's in general what I would like to see on the euro currency and what I will monitor on the euro currency in the beginning of the week.